Common Test October 2019, question and answer. Question 2A, the question asks, an intangible asset can be recognized as an asset if it meets the definition of an intangible asset, which is an identifiable non-monetary asset without physical substances. Briefly explain the criteria of identifiability according to MFRS 138 intangible asset. So the question asks to explain the criteria of identifiability. So the answer is an intangible asset is identifiable when it A is separable, which is capable of being separated and sold, transferred, licensed, rented, or exchanged either individually or together with a related contract, or B arises from contractual or legal rights regardless of whether those rights are transferable or separable from the entity or from other rights and obligations. Question 2B, the question is, Labu Sayung Berhad operates a chain of traditional homestays in Negeri Sembilan. The company decided to promote aggressively its homestay chain to local and international tourists by emphasizing on an exclusive and modern design neighborhood of traditional Malay houses. On 1st January 2016, it acquired a corporate customers list from Z Database Corporation for $250,000 and is estimated to be valid for 5 years due to frequent revision of new customers in the tourism industry. On 31st December 2018, the fair value of the customer list was RM80,000. Intangible asset is measured using revaluation model. Okay, let's see the working. First, we take the cost. The cost of the customer list is RM250,000. Then we calculate the accumulated amortization. How do we calculate it? By take the cost, divide by 5 years, the estimated years, and then we multiply by 3 years, which is 10 for 2016, 2018, and 2019. 2016, 17, and 18. Okay, then we get 150,000 ringgit, and then we calculate the carrying value by take the cost and subtract by accumulated amortization. Then we have 100,000 ringgit. Then we take the fair value, which is RM80,000 ringgit, and then we compare the fair value with carrying value. Then we get deficit or revaluation by RM2,000 ringgit. How do we know that is deficit or revaluation? If the carrying value is more than fair value, then it's deficit. So here the carrying value is more than fair value by 20,000 ringgit. So we get deficit or revaluation. The question asks to explain the accounting treatment for customer list on the year ended 31st December 2018. And the second question to ask us to show the journal entries to record the transaction for the year ended 31st December 2018. So the answer for question 2B1, on 1st January 2016, the customer list can be recognized as an intangible asset because it meets the recognition criteria of intangible asset, which are identifiable, controllable resources, able to generate future economic benefits, and the cost can be measured reliably, which is 250,000 ringgit. As 31st December 2018, the amortization cost of RM150,000 recognized is offer for the year ended 31st December 2018. Then the carrying amount was RM100,000 compared with the fair value amount 80,000, resulting in a deficit on revaluation of Rm 20,000 because of the carrying amount is more than fair value. The answer for question 2B2, debit intangible asset 250,000, credit database corporation 250,000. Debit amortization expenses 150,000 and credit accumulated amortization. Then we debit accumulated amortization 150,000, credit intangible asset 150,000.
Question 2C. The question is, on 1 January 2018, Aman Berhad acquired a franchise for Rm5,500,000. It has a legal life of 4 years and renewable at the end of every 4 years, and the company intends to renew it indefinitely. The fair value less cost to sell as at 31st December 2018 was 4,800,000. The required explain the accounting treatment for the franchise for the year ended 31st December 2018. The cost as at 1 January 2018, the amount is 5,500,000. The accumulated amortization is the cost divided by 4 years, which is the useful life, times with 1 year. So we get Rm 1,300,075. So to get the carrying amount as at 31st December 2018, the cost 5,500,000 minus with the accumulated amortization 1,375,000, so we get Rm 4,125,000. The fair value given as at 31st December 2018 is Rm 4,800,000. So we can see the fair value is more than the carrying amount, so it will cause a surplus on revaluation, which is amount Rm 675,000. The answer for question 2C, the total of Rm 5,500,000 paid to franchisor can be recognized as intangible asset because the amount is incurred through acquisition. As at 31st December 2018, the amortization cost of Rm 1,375,000 recognized in SOPA for the year ended 31st December. As at 31st December 2018, the carrying amount was Rm 4,125,000. Compared with the fair value amount, Rm 4,800,000, it will result in a surplus on revaluation of Rm 675,000 because the fair value is more than the carrying amount. However, the amount of revaluation on surplus of Rm 675,000 should be recognized as income in SOPA.